Yo, what's going on? It's your boy Track Investing back here with another YouTube video. We're going to be talking about something that I haven't talked about yet on this channel. Now, you know what we do every single day in this series, right? I like to call it the daily log, all right, where we talk about what has happened in price action, doing a top-down analysis from the daily all down to the 1 minute. But one thing I want to talk about today is something very specific. Now, as you know, today was the January 15th, right? Wednesday. That was CPI day. CPI came out. All right. Now, I want to talk about a strategy that you can utilize depending on the rules that you have for your prop firm to quickly pass funded accounts. All right. So this is not going to help you maybe, in your day-to-day trading, but if you just want to get some live accounts, stack them up so that you can focus your trading on live accounts and getting payouts, this is the video for you. Now, I'm not going to give you that nugget immediately. You're going to have to stick around and watch the video because I want you to learn from a top-down analysis so you can understand market maker buy models, market maker sell models, and you can understand the general draw on liquidity. Because at the end of the day, none of this really matters if you don't know what you are doing or what you're aiming for. So let's go through it without further ado, and we'll start from let's actually start from the weekly time frame, just so I can give you an idea of some context that's happening here on the weekly, and then we can talk about the daily 4 hour, 1 hour, get to the 1 minute. If you like what you're hearing so far, press that like button. Press that like button, press that subscribe button, press the notification bell, leave a comment below if you have any questions, and join that free Discord below. Now, without further ado, let's get down to the business. So on the weekly candle right here, right, you can see that we scalped the previous week low, right? We purged the previous week low, right, in the beginning of the week, and now we are starting to revert higher. Now, one target I had earlier in the week was this consequent encroachment wick. I want to see how we act around here, right, and ultimately how we act around this weekly IFVG. Now, you see this last candle right here, right? We closed outside of this weekly BISI, and now we are tapping it as of now, right? And so think about lower time frames. When you invert a fair value gap, you want to see this fair value gap get tapped as an entry, and then it can run lower. So I want to see how we react here. If we close in the lower half, then my bias would be bearish, and that we would start to head for lower pockets of liquidity, right? You have relatively equal lows here, here, and here. There's supposed to be some major market news events that can send NQ, running down the next, couple of weeks to a couple months to a couple quarters. This would be, the beginning of the price action to do so. Now, that's just the context on the weekly candle, right? So now that we're back in this weekly IFVG range, right? What are we expecting from here? Well, on the daily candle, let's see what happened first. We had this daily SIBI that we closed above, right, today. But does that mean that this is now an IFVG and that now we should be looking bullish? Well, you have to think about what's happening on the broader market context. On the daily market structure, what do we have? We have a long-term high here, right? Long-term high because it purged this high, and there's a short-term high right next to it, right? And this is actually what you call an intermediate-term high because we are reacting from a fair value gap, right? And price broke market structure below, right? Post and made a lower low right here with this low. Price then came back up, came back to the SIBI, then ran lower, made another low, right? So based on that logic, looks like we were in a market maker sell model, right? And where could we be going? Because these relatively equal lows right here, right? There's order pairing below this low, and there's this gap that's been left open that's a part of this gap that is below this low right here, right? And then you have this daily gap right here, and you have relatively equal lows right here as well, and right here, right, and right here. So I just want to see how we react once we get to this level. If we, I could see us coming down here and then using this to run higher if we are going to have a quarterly shift. But we already have that quarter. Sorry, if we're going to have a shift in direction. But we had this, and this is also like the beginning of a quarterly shift, right? Where we're entering the Q1 of the year, and you can see that we had this market shift, or the market is now changing directions. That's also something that ICT talks about that happens every quarter, where there's a shift in direction. We could be retracing some of this move. Now, we tapped this daily FVG SIBI, right, briefly, and then came back into the range, right? So we expanded, past this daily SIBI, right? Let's get a little closer. We expanded past this SIBI and closed above it. And we also went above the equilibrium level. Equilibrium level of what? From this high to this low. This is the equilibrium right here, right here. We came back into the bottom half of this weekly IFVG and then tapped this daily SIBI. So the fact that we closed above here, right, doesn't necessarily mean that we've broken market structure to go higher, right, and turning this into inversion fair value gap. The broader market context is still to go lower and get to these areas. So price is returning back to a short-term premium, right, to run lower, right, and continue that market maker sell model that's happening on the daily, right? We went from an external range liquidity, right, to internal range liquidity, which is a fair value gap, right? External is taken out of low. Internal is a gap. That's the next drawn liquidity that we came up to. And why is this the drawn liquidity? Because it's in a premium, right? If we're in a market maker selling model, I want to see price come back into a premium to allow smart money to continue to short to go lower, right? Because smart money shorts at highs and buys at the lows. Okay. Now, that's what's going on here on the daily. So I want to see how we react with this daily SIBI over the next couple of days, and I would anticipate price to continue to fall. On the 4 hour, right? What do we have? So overnight, Tuesday Asian, right? We could not, well, going to yesterday's PM, right? It's very clear that after we came back into this 4 hour fair value gap, right, which is from this high to the volume imbalance right here, that we were hovering in the upper half. And even though we had one candle close to the consequent encroachment, price hovered in the bottom half of this 4 hour VISI and continued to run higher, right? Telling you that we are still being supported by this fair value gap. Price ran higher, right? Expanding in the AM session. Very minimal move overnight. So we have an expansion in the AM. This is also when CPI occurred. We ended up taking out this high, these pairs of highs, coming back into this daily SIBI. That would be your draw on liquidity, especially after seeing a very large candle like this. It's very likely PM is going to draw higher. Okay. Now, on the 1 hour, let's also talk about this IFVG as well. Sorry. There's a 4 hour IFVG that formed here. Their price closed above. We did not get back down to it, right? You can see that we did not come back and tap this 4 hour IFVG right here. Showing you how really bullish we are, right? It didn't show a willingness to come back down here. It really just, it stopped, inside of this breaker candle and kept running higher, right? Taking out these pieces of liquidity. Okay. Now on the 1 hour, what do we have? On the 1 hour, not too much moving overnight here, Asian, London, right? We have a small 1 hour fair value gap, right, that we are hovering in overnight, and then price creates this bullish order block, right, confirming on a lower time frame here after purging liquidity below this low. Price creates this bullish order block, telling you that we are likely to reverse, right, go higher, takes out this high, and then going into that CPI session, price runs, takes out these relatively equal highs. And also think about this, like going into CPI, the market can typically tell you things, and this is the beginning of the crux of how I'm going to tell you guys how to pass your accounts. Now, the market will take, if people don't like to trade news. I like to trade news, especially if the market tips its hand to you. Now, look at this. We purged this low right here, and where's all the liquidity left? We're purging this low below here as well. We know that on the higher time frame, on the daily, we're on a market maker buy model, right? And we are going to return back to some form of internal range liquidity, right? Above this equilibrium, which is going to be this daily SIBI up here. And prior to the news in the morning, we have a purge of liquidity below this low and a purge of liquidity below this low. But which area of the price action is still intact, right? All these relatively equal highs right here, especially where this high is lower than this high, right? And this high is lower than this high, and this high is lower than this high. There's so much liquidity above here, and we've done a good job of purging some liquidity below here and here as well. Now, yes, we have this relatively equal lows here because of the broader market context, right, of what I explained on the daily profile, and plus now we're having shorter time frame alignment on the 1 hour, right? I'm inclined to think that if I had to put a gun to my head, that we'd probably have a very large purge of liquidity into this direction. Let's see how much did CPI move. 350 points. Crazy. All right. That's in 1 hourly candle, 350 points. Right. We invert this 1 hour IFEG as well. Come back and tap this 1 hour IFEG. Tapping this 4 hour one as well. Tapping this old 1 hour IFEG. 1 hour SIBI. Sell side inefficiency. Sell side imbalance, buy side inefficiency. That price had failed to get through. Why did I still keep this one in my on my charts? Because we failed to get through it, right? Last time we interacted with it. So I'm anticipating we come here, it could be a sensitive level. You see, we ran through these, but once we got here, it was sensitive. We took out liquidity above here. It's about 11 a.m. by the time we did that. Likely for us to react from here and consolidate, right? Comes back into this redelivered rebalance price range, right? From this candle's close to this candle's close right here, right? That's a redelivered rebalance price range where you have a wick and then a body next to it, right? That is a redelivered rebalance price range. You come back into that. This IFVG and this redelivered rebalance price range right here keeps price from returning back to this VISI. So price continues to expand, right? Post lunch session, right? So going into lunch, we had a retracement. Post lunch session, PM session continues to rise, right? On a daily profile, you're typically going to make the high of the day. On a bullish profile, you're going to make the high of the day around that 3 to 4 o'clock PM session. Then we sell back off and then tap this 1 hour BISI coming into the PM after tapping this daily SIBI, right? At 3 p.m., you can make that reversal, assuming that you've reached your targets for the day and you've hit some sort of higher time frame PD array that will allow you to reverse in the last hour of the day after making the high of the day. Now, in the 15-minute, you see that market structure a little better, right? Overnight, you purged this low, right? At 3 p.m. yesterday, you purged this low. Came back and inverted this 15-minute SIBI, hovering in the upper half, right, of this 15-minute IVG SIBI. You clean up this chart a little bit. And then interacting with this 1 hour FVG that we were with before, as well as this 4 hour FVG BISI as well. We're in the lower half of it, but not closing below this 1 hour IFVG. Purge this low, run higher, breaking market structure above this high, returning back one more time to this 1 hour FVG at 5:15 a.m. Run higher, breaking market structure above this high, comes back into this fair value gap, hovering in that, right? Then runs higher. CPI, right? Runs higher. Wicks above the equilibrium level. This is the equilibrium level, right? This is why you see some resistance here. The equilibrium level on the daily. That's why it's a PD array that I like to keep. Plus, you've taken out all this liquidity above here. So at what time? Going into 9 a.m., you have a retracement lower. And you come into this opening range gap just a little bit, right? Which is the RTH. If you switch to RTH, it is the difference between yesterday's close and the 9:30 open. Come back into this opening range gap a little bit. And, one of the confirmations that I knew the PM session was going to be bullish is that we did not show a willingness to come back to this opening range gap. We kept it open. By default, you know that if you keep it open, it didn't come back there, right? Just think about it that way. And if you study this, you'll notice that if price shows no willingness to come back down to the opening range gap, the rest of the day is typically bullish, right? So what do you want to be doing at that point? Looking for longs only, especially if you see a market structure break at a kill zone upwards, right? You know that you're on the right side of the market. So at 9:30, you come back into this gap, right? And think about this also, right? ICT also talks about that when there's either one of two things happen at CPI, FOMC, or NFP, right? You either Judah swing in one direction and then break market structure and go the other way, right? This happens in the first 30 minutes, right? Or price make a huge gap, return back to that gap, and continue in that same direction. So it came back to this gap, and it's continuing in that same direction post 9:30. Comes back into this 1 hour SIBI, right, that I talked about before that we could not break. Closes in the lower half, returns back lower, right? Deep retracement back to this 15-minute bearish order block. Why do we have that? Because we have this very sensitive 1 hour FEG in the way. We're also in a deep premium, and we have this equilibrium as well. Price runs lower. At this point, you're thinking, you're crapping yourself. You're saying, oh, we're going to return back to this opening range gap. Oh, let me not look for longs. No, right? Because we still have that daily SIBI above here that we're drawing to. That is the higher time frame drawing liquidity, right? Higher time frame trumps lower time frame. No matter what you're seeing on a 1 hour, 4 hour, if you're seeing something that we're drawing to on a daily, that will always be where we're drawing to on default, right? Time is fractal, and the higher time frame always takes precedent. We make this low at 11:45. Invert this IFVG on the 15-minute. Come back to the upper half. Plus, there's a small 15-minute FVG right here that we're reacting from, right? Very good 22 model that forms here. I'll walk through that as well. Price runs higher and taps out daily activity by 3:15 and then retraces in the afternoon. Go on the 5-minute consolidation prior to 8:30, runs higher, turns back to this gap, turns to the upper gap of this opening range gap, right? Also, you have this daily CIBI that are these red lines I talked about before, right? Plus this 4-hour and 1-hour FEG. That price is, it's going to be very hard for price to run back through here, right? At this point, you have so many time frames, right? Daily, 4-hour, 1-hour, and and plus this dotted line right here is the weekly wick constant encroachment as well. So many P rays that it's just practically impossible for price to come back lower here, right, and fill this opening range gap unless we are really bearish, unless price is really weak. So what does price do? It hovers in the upper half of these P rays, runs higher, right, confirming that, okay, we are still bullish for the day. We're probably not going to come back down here. Price returns back here to this regular rebalance price range, leaves this gap open, acts as a breakaway gap, runs higher to this 1-hour FEG, closes up above the constant encroachment, then immediately returns lower, right? That's a mohawk above the constant encroachment here. Price returns lower. Bearish sign on this candle right here that we did not continue to expand. Runs lower, makes the low, right? At about 11:50. Macro kicks off, break market structure higher. During the lunch session, we invert this 5-minute IFVG right here and the 15-minute one, return back to it with a 15-minute fair value gap right there, breaks market structure higher, fair value gaps, returns back to them, runs higher, makes it the high of the day here at this daily CIBI. Now, this is where I'm going to talk about two things. One, I'm going to talk about my 22 model strategy. That's the entry strategy I use on a regular trading day. And then two, I'm going to talk about how you can pass accounts. Now, let's just go with the 22 model first, right? At the end, I will tell you guys the nugget, right? So high, low, higher high, right? So this low right here purges this low. Let's say you had a series of, lows. This low gets purged right here. You can be reacting from a PD array. Let's say that's like a PD array right here. Doesn't have to be, but that's a really good one if it does. Fair value gap, returns back to that fair value gap, runs higher. Now that's the 22 model. I'll go over examples of that plenty. But let's say, for example, you consolidate, right? And then here at 8:30, price runs higher, right? You touch that equilibrium level here at 8:39, right? Consolidate all the way until 9:30, where you wicked above this high here at 9:25, broke market structure lower, having a fair value gap. Now this is a 22 model, right? Purging below these lows, runs higher, takes out these relative equal highs, breaks market structure lower, reacting from a 1-minute FPG, right? PD array reaction, purge liquidity, break a market structure lower, fair value gap in place. Now that is a class 22 model. Now why did this fail? 22 models are nothing unless they are in line with the higher time frame order flow. And that's why having a bias is very important, because we actually end up creating an opposite 22 model. High, low, high, and lower low, below this low. So this whole move right here looks like a 22 model bearish, but it's actually a bullish 22 model formation in the works, right? Low, high, lower low, break a market structure higher here, fair value gap, return right back to it, institutional order flow entry drill, one tick into this fair value gap, right? Runs higher, comes back into this propellant block right here, right? And continues running higher until we get to this 1-hour CIBI. Now this is a fantastic 22 model, right? You could have put your entry right here at the fair value gap, especially because this was a down close candle. You could definitely anticipate it'll at least come back to the gap. This right here is a breaker, so you could keep it below this breaker. Plus you have this 1-minute IFBG that you're below, and plus you have this FEG candle right here, and you're keeping it below the low of that. That's at least like 4 PD arrays, right? And what can you do? You can probably set your final target at the highs, right, or above the constant encroachment is 1-hour CIBI. Admittedly, I probably would have aimed for that daily CIBI above here, right? But I was taking out most of my trade here and let it ride back to break even. You would have got stopped break even over here. That's fine. Okay, you wait for the next opportunity. Now it's 10:20. You've hit this 1-hour CIBI. You've done a lot in the AM. This is the move, right? So at least for the next hour or so, you shouldn't be anticipating anything to really be happening, right? Price is consolidating. It has a solid retracement lower, right? Remember, we're still looking for longs to the daily CIBI, so all this move is nothing I don't want to participate in. Okay, low, high, lower low after tapping this 1-hour FEG, IFVG, right? IFVG. We react off of that. No fair value gaps here, so not a valid 22 model, right? And there's a fair value gap right here, so that could be a 22 model right here. But what? This is a 15-minute FVG SIBI in the way. So I want to see the 15-minute close above here, right? And also this 5-minute FVG before I'm super confident that this 22 model is going to work out, right? Because we're still in the lunch session, right? No need to trade unless it's super clean. Price creates a low, high, lower low, break market structure, small fair value gap right here, right? Small fair value gap right here. Price returns to that, continues running higher. I didn't take that because we still had not closed outside of these FVGs, right? Even though it looked really nice, you have to have discipline because you still had a beautiful 22 model form right here. We went here and then returned lower back into this 15-minute fair value gap. Low, high, lower low, break of market structure, very clean. Returns back to this 15-minute, returns back to this 1-minute FVG, right? And then runs higher. Now, admittedly, when it came back, I entered here and it, broke market structure to continue higher, right? Inverting this particular 1-minute, SIBI. But we wicked above it, and then the next candle did not show willingness to expand, which means that this is really a mohawk, and price is still being, resisted by this 1-minute SIBI. Price runs lower, ends up taking out this low. I got stopped out here, and I did not participate in this move, fortunately. Better thing I can do on my part next time is, unless we have a very decisive extension higher, right, I should be affording the opportunity for price to return back below this low and turn back to this fair value gap at least one more time before it runs higher, right? Price runs higher, keeps making higher highs, right? Short-term retracement here at 240. Another 22 model, low, high, lower, low. Break market structure for value gap, right? You could have taken this. It was in such a premium for me. Wasn't interested because we took out all these relatively equal lows, relatively equal highs, and sometimes price likes to mess around. And we're all but the thing is that the high of the day here was made at 240. We know that the high of the day is going to be made at 3 o'clock. So I could have definitely still taken this, right? Because it's before 3 o'clock, right? And we have not made the high of the day yet. And we have this daily SIBI right here. So could have definitely taken that, but I didn't. I actually went on a walk. Actually going to go pray to God, funny enough. And, could have got a nice 1 to 2.57 at the low of this daily SIBI. Now what also happened? Once you hit this daily SIBI, right? And it's past 3 o'clock, we've already made the high for the day. Now you can start hunting shorts because this is a very, very sensitive level, right? Because on the daily profile, this daily SIBI is what's going to kick off the next market maker sell model to head lower, right? So we know that price should start expanding lower from here. And plus, we've had a very large up day, power 3, right? Just think about the daily candle. It has a wick lower, expands higher, and then it'll close not typically around that wick, right? So this is the high of the day. So we know that price is going to close. The candle is going to look what? The candle is going to look like this. It's going to look like this, right? So it's going to make the high, but then it's going to retrace. We haven't had that retracement yet. And we're at a very large premium, and we're tapping a very sensitive level, which is that daily SIBI. So if we have any kind of market structure break with a fair value gap, I'm taking that. High, higher high, market structure break below this low, right? Fair value gap. Returns back to that, that's an entry. If you didn't want to take that, you can wait for a secondary confirmation. Price runs lower. You have this intermediate term high that should not be broken. Wait for a return back to fair value gap. Price continues to run lower, right? That's another entry. So anyway, now let's get to the juice of it. How could you have passed your account? Very simple. Go back and study at the NFP time or CPI time, how much this price due to swing in the other direction prior to a large move, right? What you can do is just 15 to 20 seconds before. Let's say you have two. Let's say you have one. Let's say you have two accounts, prop firm accounts that are evals. Buy on one account, sell on one account 20 seconds before it, right? And then before the news comes out, and then one of those accounts is going to win, right? If you buy, let's say for example, let's just say 4 contracts, right? It would need to whipsaw. Let's just call it and this is not financial advice. This is just something for you to demo trade. Just think about it. You may need to backtest this a little bit better. But if you buy 3 contracts, for example, right? Even if it whipsaws 40 points, if your max drawdown is on a 50K is 2,500, you would not get that drawdown, right? But price will typically run at least 100 points when NFP or CPI comes out. This is 224. So if you buy, let's say 3 contracts right beforehand, and it doesn't whipsaw enough to stop you out, but it goes in your favor, you can close that trade in a very decent profit, right? Literally pass 2 accounts like that on this day. And that's my strategy. Now, if it's the opposite direction, typically CPI will just run the other way. Now, definitely don't do this on FOMC. FOMC has a lot of whipsaw, but CPI and NFP typically are very directional. So you can short on one account, three contracts, buy on one account, 3 contracts. And if price runs the other, price will run one way, and you can make just enough money in a couple, in basically 1 minute. So anyway, hopefully this is helpful. If you have any questions on that, leave a comment below, join the free Discord. I'll see you guys in the next video.